you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. In this episode, we're going to talk about 1031 exchange, how it works, and is it right for you? Let's get unpacking. Now, if you plan to sell an investment property and want to defer paying capital gains taxes, then a 1031 exchange might suit your needs. The term 1031 exchange gets its name from the Internal Revenue Service Code, Section 1031. This section allows the seller of an investment property to defer paying capital gains by using the proceeds from that property to buy a replacement investment property. So the benefit is that an investor wouldn't have to pay taxes on the capital gains, aka appreciation of their home. This means that you can keep usually upwards of 20% of appreciation and use it towards your next property. There are requirements. There are rules and regulations to be aware of when doing a 1031 exchange, and experts recommend consulting with your accountant before pursuing this type of transaction. The real property you are purchasing should be like kind, or also used for investment purposes to the one you are selling. For example, if you're selling a single-family residence, you should buy another single-family residence. If you're selling a duplex, you should be buying another duplex. There are restricted timeline requirements set by the IRS. You have 45 days to identify in writing a replacement property, and then you have 180 days to acquire the property. So who qualifies? People with investment properties qualify for a 1031 exchange. There is no limit on how many times or how frequently an investor owner can do the 1031 exchange. You do not have to be a first-time home buyer. So if you have investment properties, you can qualify for the 1031 exchange because first-time home buyers obviously are buying a home for their primary, so they're going to live in it. So you do not have to be a first-time home buyer. Now, house flippers. The property must be owned for 2 years in order to qualify. So if the owner flips the house too fast, it won't work. Another disqualified condition is that if you make an investment property your primary residence, you won't meet the requirement of the 1031 exchange. And it could or it should trigger some capital gains issue. So be careful when you do the 1031 exchange. There are companies that can help you with the 1031 exchange and guide you through this. Hope all this helps. If you're interested in being an investor, if you have enjoyed this information, please make sure to follow. And if you know of anyone that may benefit from this, please share. More episodes to come. As an active mortgage broker and mentor, if you have any questions or need a pre-qualification, you can reach me through LinkedIn, Paige Ashby Lending, or my other contact information are listed below in all my episodes. Thanks for being part of Unpacking the Home Advantage.